a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A green light for Nvidia. China is said to be planning to approve some imports of the H200 chip for commercial use. For the taking, the U.S. unveils a strategy on Venezuelan oil. Refining giants surge. And stock futures falling while the dollar holds up as investors await more jobs data. So we get some of that jobs data today and, of course, the big one Friday. But let's take a look right now at how the markets are shaping up a few hours before the U.S. Open. So futures are lower. We did get a drop yesterday for the S&P 500, a fractional gain for the Nasdaq 100. A little risk getting taken off the table, perhaps. A little of that enthusiasm just dissipating slightly. Let's take a look at yields, because we are seeing that 2-10 spread back at 69 basis points. You can see we're ever so slightly higher on the two-year yield, lower on the two-year yield, higher on the 30-year yield by about a basis point and a half, and that's steepening that curve ever so slightly. Paul Donovan of UBS with an interesting point today. He says the president has been making some single-issue policies recently, so the latest one being on housing. They're all to do with affordability. He says that creates market risks, and that's something to watch out for. Let's take a look as well at some of the base metals and some of the precious metals, depending on what you want to call Bitcoin. Gold is down about 0.5%. There is some rebalancing going on, but that's more likely to affect silver, still above $4,400 an ounce. Copper well below that $13,000 mark, so you see it in the metals as well. And Bitcoin, for all the hopes that it was going to continue its upward journey, is now back below $90,000 a coin. All right, let's get to some individual early movers now, and across to London and Valerie Teitel. Valerie.
Hey, good morning, Bonnie. Let's start with a check on defense names. They're absolutely surging around the globe after this post from Donald Trump talking about a military defense increase of $500 billion, taking the budget from $1 trillion to $1.5 trillion. Still a lot of questions on whether he can get that kind of spending through Congress. But seeing the likes of RTX up 5%, Lockheed up nearly 8%, and Northrop Grumman up 7.5%. Let's move on to some earnings. Constellation Brands coming out with a beat in net sales. This is the maker of Modelo and Corona beer, guiding for a slightly better beer market next year as well. Constellation Brands up 2.3% in pre-market trade. There has been a big pullback in consumer demand for beer trends globally. They're still predicting a sales decline for the next fiscal year. And lastly, let's check on Nvidia. Some big news. Bloomberg scoop that China is set to approve the sale of the H200 chips into the Chinese market, which would launch a comeback for Nvidia into the biggest semiconductor market in China. Nvidia shares just outperforming the Nasdaq just slightly, up 0.3%. Bonnie?
Clearly enjoying that news. Valerie, thank you so much. Valerie Teitel there in London. And coming up this hour, we're going to speak to Sophie Huynh of BNP Paribas on the equity market. Later in the hour, Natixis CIB economist Christopher Hodge joins us on his latest report on Venezuela. Let's turn back now to Nvidia. Bloomberg learning that China is planning to approve some imports of the tech giant's H200 chips as soon as this quarter. Tom McKenzie, host of Bloomberg Tech Europe, joins us for more. Is Nvidia ready to ship these, assuming that China soon gives the go-ahead? Tom, could this happen rather fast?
Yeah, Vonnie, look, this is a huge coup for Nvidia, which essentially has been closed out of the Chinese market since 2022. They have said, Jensen Huang has said this week at CES, that they are actually in production, those H200s, which are specifically designed for the Chinese market, and that they had seen strong demand from potential Chinese clients, and that they're waiting for that license approval from the Trump administration, which says these are chips that can be sold in to the Chinese market. So a key question then has been solved and been answered, which is, would China allow the sales? And it seems from the Bloomberg scoop that this will happen as soon as the first quarter. You're thinking of big potential buyers like Baidu over in China. Alibaba as well is said to want to buy as many as 200,000 of these H200s just for individual names. So a potentially significant moment for Nvidia. This is a market they've said in the past could be worth about $50 billion US, and we could see whether or not it aligns with President Trump's expected visit to Beijing at some point in the early part of this year. But again, the lobbying efforts of Jensen Huang and the team at Nvidia appear to have paid off in Washington and now, crucially, in Beijing.
And of course, that China profit was a big fat zero on the balance sheet, and that will likely change in the coming quarters for Nvidia. Let's move to Samsung, because profit tripled there. Apparently, demand for their memory chips just absolutely ramping up. Are they finally catching up with the SK Hynixes and the Western Digitals of the world?
it's hard to find an analyst out there who doesn't think that memory prices will continue to rise at least through 2026. In terms of the catch-up piece of that, Vonnie, you're absolutely right to point out that Samsung was playing catch-up, second fiddle to SK Hynix in 2025 as they tried to get that HBM approval from Nvidia. We know that Nvidia are now looking at that, and there is a good chance that those high bandwidth memory chips will go into the Vera Rubin chipsets when Nvidia starts shipping those in the second half. So that's another potential catalyst for Samsung. But the results that we saw today, that tripling of profit for the most recent quarter, arguably was more about the growth in prices for DRAM and NAND, the storage when it comes to memory. We've just seen increased prices for that because there's so much demand for that memory in data centers. And what that means is higher prices as well for electronics. They're diverting a lot of this memory into the data center demand because simply the hyperscalers are willing to pay more. And that means there is less to go into our laptops and our hardware and devices. And that is pushing up prices. And Samsung is benefiting from that.
And its stock prices as well, Tom, too. We'll see that catch up, I'm sure, with the Western digitals of the world as well. They were up more than 200% apiece, almost 300 for some of them last year. Tom McKenzie, thank you so much. Meanwhile, in Washington, President Trump announced on social media, quote, Venezuela is going to be purchasing only American-made products with the money they receive from our new oil deal. Venezuela is committing to doing business with the United States of America as their principal partner. Joining us now from Washington is Mika Sollner of Bloomberg Government. Such an unusual arrangement. Can he make this happen, Mika, that Venezuela only buys U.S. products?
Yeah, well, President Trump will be meeting with oil executives Friday at the White House, so I think that we're going to see more come out of that depending on how that meeting goes. Press Secretary Caroline Leavitt said yesterday, I was in the briefing room when she said this, that essentially this is an immense opportunity for American oil companies. So I think that this is also an announcement that's going to be able to potentially quiet some of the critics on exactly how the president is handling the situation in Venezuela. So I think a lot is depending on how Friday goes and what's going to go on with that.
Yeah, it'll be fascinating to see the results of that. Moving to defense as well, there was a lot of movement around stocks yesterday because first, President Trump said on social media that executives should be spending more on plant and equipment and that their pay should be reduced to $5 million and no more until military, upgrades have happened. But then, after the market closed, he said that military spending should be increased by 50% to $1.5 trillion. How would that happen? What would the process be, Mika?
Well, the process would have to go through Congress, and we've already had some reaction from lawmakers saying this is just not going to happen, even House Republicans. Now, a lot of people are very shy to go on record yet or say anything public to criticize the president and his party, but I think that this is a very tall ask. This is essentially a 50% increase, and as you mentioned, the president did have some market-moving announcements yesterday, and he's probably going to continue to surprise lawmakers, but I think that a lot of them are questioning this, but it's very interesting to see the moves that the president is making, against defense companies as well, and kind of the steps that he's taking towards this.
And he also tackled housing, blocking corporate home buying. What's going on there? I mean, his FHA administrator is Bill Pulte.
Yeah, so the president also announced via Truth social media yesterday that he wanted investment companies to stop buying up single-family homes. This is clearly a push for the president's affordability agenda, which has been a sore spot for the administration. So I think we're going to see more come out of that. There's no concrete proposal yet. I actually spoke with both a Democrat and two Republicans on Capitol Hill yesterday that said they want to see more of an actual proposal before signing off on anything. But housing affordability is an issue that could potentially prompt bipartisan support.
All right, Mika, thank you so much. Mika Sollner of Bloomberg Government. Now to other top stories trending on the terminal this morning. Prices in the secondary market for luxury timepieces rose to the highest in more than 2 years, boosted primarily by demand for dressed watches, favored by celebrities such as Taylor Swift. While prices slid slightly in November, they bounced back last month on holiday season purchases, climbing to the highest since October 2023. Trading hours for European gas and power are being extended in a major overhaul. Intercontinental Exchange says UK and EU gas and electricity contracts will trade for 22 hours a day by February 23rd, bringing it in line with other global energy products. The move cements Europe's position as a liquid hub after traders flocked to the market in the wake of Russia's invasion of Ukraine. And US officials are rushing to come up with options to step up links to Greenland after President Trump's renewed demand to take over the island. Sources say the White House is considering potential business deals, including rare earth minerals mining projects and hydroelectric power ventures, to give the US a greater footprint on the island. Coming up, we're going to be speaking with Sophie Huynh of BNP Paribas on how to position for an ongoing market rotation. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Sophie Huynh of BNP Paribas seeing a broad positive fiscal impulse, producing a rotation in markets. She suggests to, quote, hold a barbell portfolio with exposure to the AI theme through hardware while adding exposure to cheap cyclical laggards. She's also positive on Chinese equities, and she joins us now. Sophie, thanks so much for joining. Just how risky is the terrain out there right now? Markets seem to be trying to digest many things at once.
I think to some extent, so we're going to have the earnings season in the coming days, which are going to give an indication whether you're going to have a broadening out of earnings growth out of the mega tech. So it's going to give some indication on whether the cyclical signals we started to see late last year are going to start materializing. The fiscal impulse, as you say, I think it's quite a consensual call now, but we don't see that yet fully reflected on the positioning side, where I don't see from the tools we're looking at any signs of exuberance yet.
Now, when you say fiscal impulse, you're talking globally, basically, but in the United States specifically, are you talking about, impacts of the one big beautiful bill, a potential check in the mail for Americans? What other kinds of fiscal impulse do you see?
So in the US, it's more going to be exactly what you said on the tax rebates that are going to be positive. But if you see out of the US, in Europe in particular, so excluding UK and France, the fiscal impulse is broadly going to be positive. But then if you look out of Europe, but also US broadly, especially in Asia, like Australia, New Zealand, the fiscal impulse is expected to be very positive as well. And that's a bit ironic at a time where central banks are still somewhat easing, they stopped. But you have this fiscal impulse that are going to be positive. There's no sign of tightening. Financial conditions have eased considerably. So we think it's going to be like a good setup to start adding cyclical laggards, which we started to do in December through European basic resources and oil.
Right. So cyclical laggards in Europe would be, as you say, basic resources, oil. What about the cyclical laggards in the United States? Where are you looking to pick up maybe something a little cheaper?
Yeah, so in US, I think that's why the earnings season is going to be important, because Q4 earnings season is going to be a confirmation of whether you have a broadening out or not. But I think it's already a bit backward looking, as in the fiscal impulse is going to be positive in the first half this year. We're going to have to look at Q1 earnings season to see if there's going to be some delivery on earnings, because for now, consumer confidence is still a bit muted. If you look at consumer discretionary stocks on equal weighted, it's not really showing like real signs of like a real impulse from the domestic demand. So on the US side, I think we're still like on a wait and see mode. There's much more, I think, signs of green shoots in Europe, where the fiscal impulse, especially on Germany, with the ripple effect on the rest of Europe, is, in our view, a bit more obvious.
How do interest rate differentials between the two continents, and indeed, broader interest rate differentials, impact your view?
So I think the rotation view has been reflected on interest rate differential. So if you look at euro dollar, but dollar versus other currencies, the dollar has been weakening to some extent at the end of last year when you started to have a risk on. But I think it has also followed interest rate differential, where you got yield higher across the board, except to some extent in the US. So you have this divergence that is currently being reflected on markets. So that's supportive for currency. So if you want to be long high beta FX versus dollar. But I think positioning at this point on dollar is already on the short side. So you need to be carefully cherry picking which FX reflected on interest differential you want to gear to. So countries where you have good domestic fundamentals that will continue to drive yield higher. And we think Sweden, for example, or Australia, that are currencies you want to be long. So that's why we continue to be long Aussie versus dollar, but also Swedish krona versus euro.
Okay, fascinating. You also think that China is not just investable, but that there's more room to run. Goldman Sachs also out in the last day or two with a forecast that Chinese equities will be up 20% this year. Do you see that much upside?
So last year was all about multiple expansion. We need to see this year is if there's going to be some earnings delivery. So especially if the fiscal impulse, especially to boost consumer demand that has been muted last year, is going to start materializing. So we think at this point you need to be a bit more cherry picking in terms of which exposure to Chinese equities you want to gear to. Even if like broad investors with global mandate are still underinvested and underweight Chinese equities broadly, I think focusing on China tech, where they took a different route from the US, it allows you to diversify on the AI theme, but also focusing on the more exporting-led stocks, which will benefit from the engine evolution policies that could materialize into better outlook on profit margins and earnings, could definitely be things you should look at on the China side.
I know you're positive on Korea as well, even though it also had a really standout year last year. Just want to come back to the US for a moment, though, before we have to leave it. You say AI hardware is going to be the next leg of the AI trade. Can you expand a little bit?
So it's exactly so if you look at China and US took the path of cloud-based AI infrastructure. On the China side, it's been much more focusing on the open source model, focusing on AI application and edge AI. So we think at this point, like having more certainty of earnings is going to be key for the AI thematic this year. So you want to basically gear to the AI theme, but focus on sectors, but also countries where the earnings materialization are going to come a bit faster. So that's why in terms of tech, focusing on hardware, so like Korean equities, China tech, in our view, makes a bit more sense than, to some extent, the hyperscalers, where there's still uncertainty on the earnings path in the years to come.
Sophie, how much are you keeping an eye on US policy and its ability to change on a dime, and how much is that impacting the amount that you invest outside of the United States?
So it has an impact, as in, I think 2 years ago, you would be overweight US because of US exceptionalism and the fact that the US economy was able to deliver on the growth side. Now US exceptionalism has faded, but to some extent you want to diversify away because the policy risk is a bit higher. So I think don't put your eggs in the same basket. And I think this reflationary and the fact that you have the story about fiscal impulse this year is basically the opportunity to add a bit more out of the US, and we think Europe, to some extent Asia, where the export cycle is still alive, could be good propositions.
Sophie, pleasure as always speaking with you. Thanks for joining us this morning. That's Sophie Huynh of BNP Paribas Asset Management. Coming up, a fatal shooting by an ICE officer in Minneapolis fuels protests across the country. A look at what's making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Washington Post leading with the fatal ICE shooting in Minneapolis. Local officials are disputing Homeland Security Secretary Kristi Noem's claim that the woman fatally shot by an ICE officer had threatened officers with her vehicle after blocking a public street. The Post says the Trump administration moved quickly to defend ICE. Next up, President Trump told The Times he expects the US will be running Venezuela and extracting oil from its huge reserves for years. In a 2-hour interview with the New York Times, Trump also addressed Greenland and NATO, the Russia-Ukraine war, and his plans for further White House renovations. And finally, on the front page of the Financial Times, US oil companies warning they will need, quote, serious guarantees from Washington before they make splashy investments in Venezuela. U.S. officials held crunch talks with top energy executives in Miami on Wednesday, according to the FT. Trump has also summoned executives from some of the country's biggest energy groups to the White House Friday. All right, let's take a look at these markets a few hours before the U.S. Open, and we are seeing futures lower, just fractionally lower, but we did have a 0.3% decline on the S&P 500 yesterday. Just a little of that enthusiasm coming off the boil that we saw at the beginning of the year. The US dollar index a little bit higher. We have the 10-year yield at 4.1554. It's moving just ever so slightly. We have metals coming off the boil as well, with copper trading well below $13,000 a ton. And that rebalancing of the underlying BCOM index probably going to cause some silver selling today. We're definitely seeing gold off, but just by a little bit. Coming up, Christopher Hodge of Natixis joins next on his latest report on Venezuela. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A green light for Nvidia. China is said to be planning to approve some imports of the H200 chip for commercial use. For the taking, the U.S. unveils a strategy on Venezuelan oil. Refining giants surge. And stock futures fall. The dollar holds up as investors await more jobs data. Let's take a look at that market picture now, with futures lower across the board. We did see the S&P 500 with a 0.3% decline yesterday. The Nasdaq was up fractionally. Confidence may be dissipating a little, or at least a little risk getting taken off the table. Let's take a look at the bond universe, because that curve is steepening just a little bit again. We see yields a tiny bit lower at the front end, a tiny bit higher at the back end. That 2s10s spread now at about 69 basis points. And if we take a quick look at where copper and gold are trading, we can see copper is well below $13,000 a ton now. Gold down about $30, although there is some rebalancing going on there. And Bitcoin just topping $90,000 once again. Let's get to some individual movers now with Valerie Titel in London.
Good morning, Ivani. Let's start with a check in the defense sector. This tweet from Donald Trump about potentially raising the U.S. military budget by 50% is really setting alight defense stocks around the globe. In Asia, in Europe, and in the U.S. pre-market, we're seeing the likes of RTX up 4.5%, Lockheed Martin up nearly 7%, and Northrop Grumman up 7.25%. If he is successful in boosting the U.S. defense budget by $500 billion, that would be the largest increase the U.S. defense budget that it's ever seen. Let's move on to earnings and talk about the demand for beer. Constellation Brands posting a beat in net sales for the third quarter, and the shares are higher by 2.3% in pre-market trade. Also, they did reaffirm their full year guidance and saw slightly better trends for the beer market in the December quarter. Lastly, let's move on to tech. Nvidia is outperforming the broader Nasdaq, but just slightly. It's up 0.2%. This is on the back of the Bloomberg scoop that China is set to allow the sales of the H20 Nvidia chip into the Chinese market, would launch a return to the Chinese market for Nvidia. The Chinese market is the biggest market for semiconductors, and the CEO, Jensen Huang, has told reporters at the CES fair in Las Vegas that they are seeing decent demand already from their Chinese counterparts. Bonnie?
Val, thank you. To some breaking news now. Challenger job cuts announced early on their website at a 17-month low. Cuts coming in at 35,553. That is down by 8.3% year over year. Once again, U.S. Challenger December job cuts down 8.3% year over year. If we take a look at market reaction, we're not seeing too much. Futures were lower. They continue to be lower, and yields are also not really moving off the back of this data, which, as I say, was released early on the Challenger job website. And that will be better news for those watching whether the employment market is weak or no. Meanwhile, Natixis CIB out with a new report examining the legal, political and market consequences of Nicolas Maduro's capture. The author of the report, Christopher Hodge, joins us now. He's chief U.S. economist, but he previously spent 2 years at the U.S. Treasury covering Venezuela and helped design the 2017 U.S. financial sanctions. Chris, thanks for joining. Let's start with those sanctions, because you did help design them. Do we know what kind of an effect they had on Venezuela's economy and whether they, quote unquote, worked?
Thanks for having me, Bonnie. It's really difficult to precisely assess how effective the sanctions were, because we don't have a lot of insight and specifics on how bad the economy actually is. It's a country that has not had reliable data. The IMF has not done a full Article 4 audit in some time, and any sort of analysis has to be based on oil prices and production. And plus, much of their debt is not public. So I think in the short run, the key is going to be trying to keep up operational stability for oil production. In the longer run, it's going to be about increasing investment and production.
If those sanctions are lifted, some of them or all of them, will that be something that we should be watching, Chris, or does it even matter anymore?
Yeah, I think it absolutely does matter. And I think in the medium to long term, the key question is how quickly can production come back online and come back to potential. At its peak, production was about 3 million barrels per day. That came down to about under 1 million recently. And investment has been far below what's needed for operational continuity, and the infrastructure is really, really bad. There's two primary issues that could hold back investment. The first one is the price of oil currently. And given the properties of this type of oil, it's very heavy, it's very sour. Increased production is going to need a higher break-even price. So typically, PDVSA, the state-run oil giant, really struggled when prices were below $72. Right now, we're closer to about 60. And I think even more concerning is the longer term environment. Now, it's estimated to cost about $100 billion over 10 years to double production. Greenfield projects are going to be even more expensive. So convincing U.S. oil majors to invest billions with such a cloud of instability, given the changing political dynamics, is going to be really, really difficult. So.
Yeah. We were speaking with Trafigura earlier this week, and they basically made it clear that they want to see what the US is offering them in order for them to get involved, because there's so much risk out there. So what does it do to the Venezuelan economy? Will the Venezuelan economy improve, do you think, over time, given that there's not that much incentive, at least right now, and to the extent that there is incentive, it seems to be to the benefit of the United States and not Venezuela?
Yeah, I don't know that improvement is necessarily on the table right now. I think the best we can hope for is stability. And I think the risk of a near-term disruption in exports is still pretty limited at this point. It was kind of small to begin with because most of the flows were going to China. But now, according to the Department of Energy, all proceeds from oil sales are going to settle in accounts controlled and distributed at the discretion of the U.S. government. So by aggressively enforcing the blockades and only allowing approved sales to take place, the U.S. has, pretty much gained complete control over oil exports. And, given such heavy American involvement, assuming the new leadership plays ball, and it appears that they actually will, I think production is going to be pretty stable, which are going to keep price risks pretty bearish.
Chris, what do you think about international bondholders? Do they get paid? To what extent? And, how long for should they keep those bonds?
Yeah, it is a major question because a lot of the bond is not public. And I think, this issue of government debt is going to be a huge deal because as production continues to increase, there are going to be claims on that production, and creditors are going to be looking to take a piece of any of the profits from oil.
Chris, if we can move to the US for a moment, you are obviously the chief US economist. I want to ask you about the Challenger job cut number that we just got. It was out early and unexpectedly a 17-month low for those job cuts. Now, again, this is private data. We're going to wait for Friday. But what do you make of the labor market and its strength right now?
Yeah, the Challenger data is not always a great month-to-month indicator of what the official data is going to be. I actually think we're going to get a pretty decent jobs print on Friday. I got job gains at about 85,000, but we are still getting indications that there is cooling in the market, and I think that's probably going to continue in Q1. I think the Fed is going to be in a bit of a bind because I have unemployment rising in Q1, but inflation staying pretty sticky. I think the Fed's concerned that unemployment is going to continue to go up and breach 5. And I think the Fed is structurally dovish. So I think what we saw from job openings data yesterday is that demand for workers is still pretty soft. And I think as long as we get softness in the market and inflation doesn't spike, I think the Fed is going to bite the bullet and continue cutting, despite some of the very genuine protests from the hawks and their concerns about inflation.
When do we get a Fed rate cut next year?
So I think if we get unemployment that goes at 4.6%, I think the odds of a cut in January go up. Other than that, I think the Fed is probably going to wait until March to see how the data evolves. But I do think the Fed ultimately gets down to 3% in 2026.
All right, Chris, we have to leave it there, but pleasure speaking with you, and thank you for all that context on Venezuela as well. That is Christopher Hodge, Chief U.S. Economist at Natixis CIB. Now to other top stories trending on the terminal this morning. U.S. officials are rushing to come up with options to step up links to Greenland after President Trump's renewed demand to take over the island. Sources say the White House is considering potential business deals, including rare earth minerals mining projects and hydroelectric power ventures, to give the U.S. a greater footprint on the island. President Trump has ordered the U.S. government to pull out of 66 international organizations that the White House says, quote, no longer serve American interests. The list includes 31 United Nations entities, as well as 35 non-UN organizations. Trump directed U.S. agencies to cease participating and funding the entities in a presidential memo. And Ford hinting at robo-taxis with plans for eyes-off-road technology. The new version of Ford's Blue Cruise driver assist feature will debut first on the automaker's forthcoming all-electric small pickup truck. Ford is considering different pricing options for the technology, including a one-time charge, a per-mile charge, or a subscription. Coming up, Chevron in talks with U.S. officials as other oil giants gear up for a meeting with President Trump on Friday. More on that story next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Bloomberg is learning that U.S. government officials are in discussions with Chevron over possibly extending the producer's special license to operate in Venezuela. The talks come as President Trump prepares to meet with oil executives tomorrow. Joining us now is Bloomberg oil strategist Julian Lee. Julian, we've been hearing all week from everybody that they're really going to need a lot of incentive to go back in there. Not only are there continued political risks, but there's also just the idea that it's going to cost an absolute fortune. What will these executives need from the U.S.?
Well, I think the first thing that they're going to need is some form of long-term guarantee that their staff in Venezuela, should they go back, will be safe. That is going to be a key requirement for anybody putting people on the ground in Venezuela. The second thing I think they're going to want is some form of guarantee that their investment dollars will be safe and that they'll be able to get a return on them. U.S. companies have been there before. They've had projects nationalized on more than one occasion. So from that broader political perspective, Venezuela is very high risk. I think for anybody looking to invest in Venezuela, they're going to be looking at a multi-decades horizon for their investment and for getting a return on that. So this is going to require some kind of longevity from a government that is, in the US that is going to change in 3 years' time. So that's going to be complicated.
Yes.
And I think they're going to look at the current oil price, and that's not going to make them perhaps too enthusiastic about investing billions of dollars in Venezuela. The break-even prices just don't work at the current market level.
And at the same time,
that said, they will.
Yeah, at the same time, Julian, Trafigura's head of oil said that's all anyone's been talking about Venezuela all week since it was all, went down on Saturday. So there is excitement there to some extent. Will these companies be competing with each other, assuming that those base conditions are met, for the better projects, the better spots in Venezuela? And how would that all work out?
Well, I think someone like Trafigura's interest is somewhat different. They are essentially looking at trading Venezuelan oil. So if that market opens up and if they're allowed to trade Venezuela's oil internationally, that's great for Trafigura and for the other trading companies. That's a very different proposition to investing in new production. So there are a lot of, I think, moving parts in this, and there are a lot of people who have different interests in the opening up of Venezuela. I mean, U.S. refiners on the Gulf Coast, they will see this as an opportunity to diversify their sources of heavy crude. That's got to be good for them. Venezuelan barrels will compete with those from Canada and Mexico, and that's going to be good for refiners. So they're looking at it from that perspective. I think we perhaps shouldn't get too caught up in ideas that there's going to be a sudden ramp up in the overall volume of Venezuelan oil available on the market. What I think we are going to see is a redirection of those flows. The exports are perhaps going to come out of the shadows and back into the mainstream. And we will see, I think, increased volumes going to the US Gulf Coast and hopefully increased volumes being traded openly on the international market. And much of that may still go to China, but perhaps not with the big discounts that the Chinese have been receiving because Venezuela hasn't had alternatives.
Fascinating. Julian, thank you so much. We'll hear more, no doubt, after the executives meet with the president on Friday. That is Bloomberg's Julian Lee. In Washington, President Trump demanding an increase in defense spending, posting on Truth Social, "I have determined that for the good of our country, especially in these very troubled and dangerous times, our military budget for the year 2027 should not be $1 trillion, but rather $1.5 trillion. Hours later, he signed an executive order requiring major defense contractors to end stock buybacks and stop issuing dividends until they invest more in factories and in research. Back with us now is Mika Sollner of Bloomberg Government in Washington. So a lot of demands from these defense companies, Mika, but also presumably a demand on Congress that it ups military spending. How would that happen?
Yeah, well, this will have to be done through the congressional appropriations process. And when you ask lawmakers on this, when I actually spoke with some Republicans and Democrats yesterday who, were really skeptical that this could be a possibility. Now, this is part of President Trump's larger push on national security right now. This has been a huge focus for him at the moment. And I think that, he explained in his Truth Social post that he put yesterday that he wants to build, this dream military. So this has been a big push for the administration. He's got 3 years to do it. I think he wants to get one final huge ask through Congress here, while Republicans remain in total control in Washington.
Well, just in the same afternoon, he also took on the big corporate home buyers, saying that he's going to block them buying multifamily homes. Is that a possibility?
I think that's certainly a possibility. There's, lawmakers on both sides of the aisle that really want to do something when it comes to housing affordability. Homeownership has dropped in recent years, especially for younger Americans. And I think the White House recognizes that a cost of living is an issue, affordability is an issue. This goes into that broader push that they're doing to try and find ways, policy proposals to address that issue. So I think that we're going to see more concrete plans come out with this. The president, I think, is expected to sign an executive order related to this. And I think we're going to go see more down the line in exactly what he wants from Capitol Hill when it comes to the issue of housing affordability.
Mika, thank you so much. Mika Sollner there of Bloomberg Government in Washington. And turning to tech now, sources telling Bloomberg that China plans to approve some imports of Nvidia's H200 chips as soon as this quarter. Joining us now is Bloomberg's Peter Elstrom. Peter, can Nvidia make this happen fast, assuming that China gives the go-ahead to its companies to order them?
Hi, Vonnie. Yeah, this is a big scoop from the team about China's willingness to buy some of these H200 chips. We've been in this period where Chinese companies were banned for a while from buying Nvidia's chips by the U.S., And then the U.S. approved some of them, including in December, President Trump's administration approved the H200 for sale. It's not the most advanced chip that they have, but it is quite advanced. But nobody was clear on whether Beijing was going to allow those chips to be purchased within the country. Now what we're hearing from sources is that, yes, indeed, companies are going to be able to buy these chips, again, as soon as this quarter. That's very important for them. We know that Alibaba and ByteDance, for example, would like to order 200,000 of those chips to be able to push forward with their AI efforts. One thing that is not going to be possible is that these Nvidia chips are not going to be used at state-owned enterprises, government agencies, and the military in particular. So that will narrow a bit the total market that Nvidia will be able to aim at. But it is a big step forward for them after essentially going from 95% market share before all these restrictions to zero. Jensen Huang has been quite outspoken about how he would like to get back into the China market. He knows that demand is there, but now we're going to see that move forward.
Yeah, what kind of pricing power does he have in China, Peter, for these chips? I mean, is there competition? Obviously, there's really not competition for these chips. Can he charge different prices than he would in the United States, for example?
Well, there is budding competition. U.S. customers typically would want to buy more advanced chips than the H200s in particular, but there is budding competition from Huawei Technologies, which is a fierce competitor in a number of different areas, particularly AI chips right now. There's a smaller player called Cambricon that's coming on, so certainly domestic players are trying to supply this market. That's one of the reasons that Beijing has been reluctant to let its companies buy Nvidia's chips, because they want to build up self-sufficiency. They don't want to be at the mercy of the U.S. government to cut off these kinds of supplies. So they want those domestic competitors to be able to build up their capabilities. But in the meantime, they are going to greenlight some of these purchases from Nvidia. That's going to increase their sales a bit. And Nvidia has made the argument that it's important for American technology writ large to be able to sell into this market because it's such an important market for chips and technology more broadly.
An amazing scoop. Peter, to you and your team, thank you so much. That is Bloomberg's Peter Elstrom. Coming up, more jobs data on deck in your day ahead. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now let's take a look at what's ahead today. We get more jobs data with initial jobless claims at 8:30 a.m. Eastern. Don't forget we got those challenger job cuts, followed by wholesale inventories at 10 a.m. Eastern. And Treasury Secretary Scott Bessent expected to speak at the Economic Club of Minnesota. Let's take a look at some pre-market movers. Obviously, defense stocks are in the crosshairs. This after the president called for $1.5 trillion of a defense budget in 2027, not $1 trillion. He said that after the market closed, they were down quite substantially yesterday after his previous tweet about executive pay and what they should be spending their money on. Constellation Brands up 2.3%, third quarter beat on improved beer trends. And Merck is also higher by 1.3% in the pre-market. It is expected to complete its acquisition of Cidara Therapeutics. This is the macro picture. A little bit of a risk-off tone today after the S&P was down 0.3 yesterday. The 10-year yield not really moving. The dollar index slightly stronger. That's it for Bloomberg Brief.